Hello everyone, welcome along, thanks for tuning in. So the number one reason for trading losses in Forex, you're probably wondering what I'm going to talk about in this video. Is it going to be misunderstanding price action or not being able to read trend, or are you using too many indicators? To be honest, I could talk about lots of things that are causing losses for beginner traders, especially in Forex, but I'm going to talk about something even more fundamental than that, something more right at the core of Forex itself, and that's simply a misunderstanding of how the currency market is made up. Now what I mean by that is most of you will look at this list here on the left. This list, there's 28 charts here if you don't count the exotics. We look at these major currencies. There's 28 markets there, and most of you will look at that list and you'll go down through that list and you'll look for trading opportunities, anything that meets your rules, and you'll take a trade. But the problem is, and the mistake that's been made, is these markets are not all the same. They're not all the same. You do not have a list of 28 independent markets which you can find your trades in. And so what I'm going to say now might seem a little bit strange, but everything here, everything from this part down, doesn't exist. Or as far as you're concerned with regard to your trading, I want you to treat them as if they don't exist. Because what actually happens here, so at the top we have our majors, everything linked into the dollar. We have everything then without the dollar is known as a cross rate. So we get euro crosses, pound crosses, yen crosses, etc., etc. So everything that doesn't trade directly with the dollar is known as a cross. And effectively, it's actually doesn't exist. It's made out. It's a formula that made up from the movement here. So what you actually get is the movement is linked to what happens up here. So what do I mean by that? Let's look at the chart of the euro dollar, for example. We've got the euro dollar chart. On this chart we have two currencies. We've got the euro and the dollar. We see the value of each, and for this to move, you've got either the euro to get stronger or the dollar to get weaker, or vice versa. We'll have movement on this chart. Or if we go to another chart, like dollar yen, two currencies on this chart. For this chart to move, we either have dollar to get stronger, the yen to get weaker, or vice versa. And we've got movement on this chart. However, if we go to something that doesn't involve the dollar, let's say we go to euro yen, because we just looked at those two. If we go to this chart, for example, now this is very different. And this is where the problems come in. Problem is now we don't have two currencies in this chart. We actually have three currencies on this chart. And that's the fundamental difference between a cross and a major. We actually have three currencies on this chart. Now for this chart to move, it's completely different to the ones we just looked at. And I'm just going to explain what I mean by that. So what we have on this chart, so I'm going to try and draw or write with my mouse, not that easy. So we've got euro yen. Okay, so euro yen here. Now if we want the euro yen chart to go up, what this is actually made up of is euro dollar and dollar yen. Okay, for this chart here to move, so this chart we're looking at is euro yen. For this chart to move, what we actually need is for these two to move. We need euro dollar and dollar yen charts to move to cause the movement in this one. So if we want the euro yen chart to go up, ideally the scenario you want to see is euro dollar to go up and dollar yen to also go up. Because that's meaning we've got the euro is getting stronger and going higher, and if dollar yen's going up, we've got yen getting weaker. And that causes this chart to move higher. If this one, for example, goes the other way, we actually see euro dollar going lower and dollar yen still going higher. And we've got the euro getting weaker and the yen getting weaker. What actually happens in this chart is they go sideways. Yeah, this chart will not, or generally won't move, depends on the rate of change. But generally you'll see that this one then, one cancels the other one out because both are actually getting weaker. And that's what's been happening up here. That's what's been happening in this period for euro yen. And that's where a lot of you are getting mixed up. And The reason being, let's have a look at euro dollar. Go back into euro dollar. We had the strength in euro dollar. We had a nice uptrend in this market. A few little pauses in here, but generally there was a lot of momentum for the euro. And through very similar period, we had a lot of weakness through here and on yen, so strength in dollar. So we had yen weakness and euro strength, which was causing nice movement in euro yen. So basically, look at this nice period of trend through here. Now, if you take this chart in isolation, which I know a lot of you will be doing, you'll be looking at periods like this. You look at areas like that and going, we get a nice trend. That meets all my rules. We're sitting back into a moving average. We get nice price action. I want to buy that. But you're not looking at actually what's creating this. What has created this has been the euro strength and yen weakness. So for this to continue, you want to see euro continuing to be strong and the yen continuing to be weak. But if you actually, let's take a check on the date of that. We actually look there, that's the 26th of September. If we go to the same period on the euro, on the 26th, and you actually see, whilst the euro had been strong, if you actually look at the same period there, the euro effectively actually broke to the downside out of a range and actually now went into a downtrend. And you'll see that the euro had a little bounce in here, but ever since pretty much euro yen hasn't moved. Yeah, and that's because euro's been getting weaker ever since that period, since we broke to the downside through there, and yen has continued to stay weak. So that both have cancelled each other out, and euro yen hasn't moved. So if you're going to use and trade cross currencies, and which I do recommend you do, the simple way to treat this is actually just look, rather than considering that we've got 28 charts, you actually, and it's much easier to think it this way, if you just consider you've got 8. You have 8 markets here, and you got to consider what you want to do with each of them. Do you want to buy the Aussie? Do you want to buy the euro? What do you want to do with the pound, etc.? What do you want to do with CAD and Swissy and yen? Work out individually what you want to do with them. Do you want to buy them, sell them, or maybe do nothing based on maybe they don't have a trend, something like pound, like for the example at the moment. Maybe you want to stay away from that. Work out what you want to do with these, and then find combinations in there that help you. So if you want to buy the euro, for example, but you wanted to sell the Swiss, then you could look to buy euro Swiss. Okay, use these as a combination. Make up your own combinations based off what you want to do with the major. Do not treat these independently. They are not independent. Okay, they are just ways in which we can benefit from the movement up here. And that's definitely one of the big causes I see week in, week out from traders. Misunderstanding and trading things they simply just don't want to trade. They just looked at the chart and thought that looked nice. I'm going to trade this. So no, stick to working out what you want to do with the majors and trade the crosses whenever you want to combine any of these majors together. Okay, have a go with that, guys. Or even go back through your own some of your recent trades and see if that's been a cause. I'd be very surprised if you don't have a significant number of your losses has been down to misunderstanding and mistiming trades within cross currencies. Okay, but have a go. Any questions, drop me a line and I'll be happy to help.